Good morning, everybody. Welcome to the Game Plan. My name, of course, Gareth Soloway, Chief Market Strategist here at Verified Investing, and I'm here to guide you guys through some wild action in the stock market, in the crypto markets, as well as the commodity markets. Now, listen, there's been a lot of news in the overnight. The big event was that NVIDIA came out and said, listen, there's new restrictions being imposed on us from the Trump administration in terms of selling chips to China. This is going to cost us $5.5 billion. So NVIDIA, again, announcing a $5.5 billion charge. That's not a small number, right? In terms of their earnings, that is going to take a chunk out of it. Therefore, price of NVIDIA stock needs to come down to reflect that. This is continuation of the trade war escalation, where, again, more and more chips that have gone to China have been restricted, and this is just the next leg. And remember, this is following yesterday where China said it put all Boeing orders on hold, and they actually told all their companies to not order any new planes from Boeing. So again, it's a tit for tat, but the tit for tat between countries here is now going to cost the U.S. and their companies billions and billions of dollars. All right. So that's the big news. We had some earnings out there. United Airlines coming in with better than expected earnings. That stock is up a little bit in spite of a stock market sell-off this morning. And then we saw ASML, which is a chip company out of Europe, reporting earnings that were a little bit weaker than expected. But honestly, it's not really hurting the stock itself. It's more that the chip stocks as a whole are down. So it's down essentially in line with the other chips like NVIDIA, AMD, Broadcom, etc. All right. Let's get into some chart action here as we get going, guys. So if we take a look at the ES futures, this is the S&P futures. We can see that, again, this is where we traded yesterday. So the markets initially yesterday were up. We chopped around. We kind of faded throughout the course of the day. Then you had the futures close for a little bit of time. They reopened with a gap down. That's after that news kind of hit, and then a continued sell-off here in the overnight. This was 1 a.m. Eastern time. So basically, I was sleeping at this point. We bounced. We pulled back, double-bottomed, ripped up. There must have been some sort of rumor there, but look, we're now starting to fade back down. Now, we did get some news this morning from retail sales. Retail sales came out, and they were slightly better than expected. So again, slightly better than expected, but again, it wasn't good enough to tell us that we're not going into a recession. It just tells us that the consumer is not fully stopping their spending, that in fact, maybe it's going on credit cards or just being added to debt. So it's not really being a relief to anyone out there that consumer spending or retail sales were slightly better than expected. All right. Back to the chart. So futures remain sharply lower. If we go to the daily chart on the ES futures, we are down just over 1%. Now, if you're looking at how volatile we've been of late, 1% does not seem like a lot. But again, it's a slippery slope. If we start to kind of come back down here and slip, we actually could see a move down to double bottom. Now, I'm still in the camp that until proven otherwise, this could be a little bit of bullish consolidation. Remember, bullish consolidation is after a sharp up move, right? So you get the up move, you kind of go sideways to lower for a little bit of time, yielding that next move up in the market. So again, I'm not saying that's exactly what's going to happen. I don't know. But what I do know is pattern recognition is key here. And as of now, even with today's pullback, this is still inside of this massive green candle, and we're still in the upper 50% of that move, right? So again, if you look at a chart, when you do a bullish pattern to the upside, so let's do that here, folks. Let's take a look at that. If we do a big move up on the chart, we generally, when we make bullish consolidation, you want to stay above the 50 percentile level, right? So if this is the 50 percentile mark, you want to see price consolidating in that range so it can then make a bigger move up. Once you get below the 50 percentile level, the odds of it being a bull flag are greatly diminished. So just keep an eye on that. And again, doesn't mean it can't break below that, right? We could easily see this come down sharply, but at least as of now, it's in that upper 50%, which still potentially holds the bullish pattern of consolidation, even in spite of today's drop. Now, if we do move up on the charts, folks, let's go away from that. If we do break above this level here at around 55.20 on the S&P, we would then look for a move to gap fill, which would be our next target around 5,700. Ultimately, just to be crystal clear on my bias here for the markets, right now the charts are guiding me to be ever so slightly bullish in the near term. But the bigger picture remains unbelievably scary. Okay, so you have to think about it like this, is that, while you can get bounces in bear markets, you have to be cognizant that overall we could be setting up for another major leg to the downside. One of these things that I love to show you guys is the chart of the monthly S&P 500. We flip it to the logarithmic chart, and I've shown you guys this. Probably I show this to you guys once a week because I think it's that important. If we take the 1929 high before the stock market crash and Great Depression, and we connect it through the dot-com high right here in 2000, what we can see is that this high, we extend that out, this has been the short-term high. So in general, we should see a bigger correction down because, again, you had the dot-com collapse here and you had the Great Depression here, right? So in theory, every time we've hit this line, the previous 2 times in literally the last 100 years, it hasn't just been a small 20% pullback in the markets before new all-time highs. It's literally marked the highs on the market. And at minimum, the smallest correction was that we saw in the dot-com era. On the NASDAQ, it was 66%. On the S&P here, from peak to trough, it was about 50%. So again, if you just think about it like that, you say, okay, at minimum, we probably should see a 50% rollover in the S&P 500. Now, the other chart to keep an eye on is the NASDAQ composite, which I've shown you as well before. And if we bring this up and we flip it back to the regular period, we can very clearly see that this as well, the low and the low, both major bear market low from 2022, COVID low from 2020, and then the high here. And look at what we tagged up here. So what do we see about this? The low of the parallel to the high of the parallel to the low of the parallel to the high of the parallel. In theory, we should at minimum be going down here in the NASDAQ. So again, when I'm saying that while I think that their near term is still a slight positive bias to this market, please understand, for me, it's an opportunity to reload my shorts and position myself for the next leg down. I haven't really done that yet because we haven't bounced enough to make me comfortable shorting the market yet. But at some point, I will be absolutely looking to do that. All right. The dollar today, ever so slightly lower. Now, what's interesting here is on the US dollar. So number one, we've broken this trend line, right? So this trend line has been broken. Number two, this is starting to look like bearish consolidation, right? We know the bear flag is the inverse of a bull flag. A bear flag is a sharp move down with kind of inside bar consolidation, right? And what's the probability of that pattern? It's another move to the downside. So listen, I'm still always in the camp that there's a chance that you could see a retrace to the scene of the crime, maybe up here. But one thing I do know is we've confirmed below this trend line. When you confirm, so you close below, and then the next candle closed below that low right there. That's confirmation, meaning that it's unlikely it's a fake out by institutions just to grab people's money on that trade, right? So what that means is if you retrace back to the scene of the crime, which is that trend line, it generally has about a 70 to 80% chance of being rejected and us making lows. Now, we may not get up there. Maybe we're just going to go sideways and roll over. But my point is that probability continues to be bearish on the dollar, even if we float back up into that level. The 10-year yield, this is a new trend line. For some reason, I had a stupid trend line here, and it actually pushed below. And I said, you know what? That doesn't make sense. Why did it push below? And then I'm like, duh, connect the high here to the high here to the high here, and look at that. That's the trend line to watch right now on the 10-year yield. Notice 10-year yields are basically flat on the day, but they are off their lows. Remember, if the 10-year yield begins to climb up, all right, so let's say we start to rally up on this, trade war where, again, other countries, specifically China, maybe dumps treasuries, which pushes yields up. Well, then the stock market goes in the opposite direction. The stock market trades to the downside. So watch the 10-year yield really carefully. The other thing to note here, too, is this, guys, is that just like we were talking about how the dollar broke to the downside and confirmed, ask yourself, did we confirm a breakout on the 10-year yield? And the answer is yes, we did. Here's your close above, and here's your confirming candle. So that means this is going to be major support and has a favorability for yields trading back to the upside. All right, so little tidbits like that. Flipping over to NVIDIA, you can see when that news hit yesterday after hours, look at the drop on NVIDIA. We then kind of had that bounce back. We saw the markets bouncing back overnight, and then down we go again. We're trading just off of the lows. Now, flipping to the daily chart here, what do we have here? So again, NVIDIA is trading around 105 to 104. I only have a level if we get back below 100 for a day trade today, and then there's a gap fill at around 96.35. So again, suffice it to say, if I'm going to be a buyer of NVIDIA today as a day trade in the live day trading room, I need it to get down at least to 100 before I stick my neck out. That would be my first level of interest. Apple today, we are seeing Apple as well rolling over, not down quite as much as NVIDIA. But again, remember, Apple is a prime target. All right, there are a few companies out there that make a lot of cars, or I shouldn't say cars, but in fact, Tesla has a lot of, or did have a lot of sales in China. But Apple makes a lot of their iPhone components in China. And so what this does is if China retaliates, they already retaliated via Boeing. What if they retaliate against Apple? And that's something that we have to monitor here. And that's probably why Apple has remained as weak as it has of late, now trading back below the even number of 200. So these are all little possibilities that we have to monitor in the trading game, and just be aware of is that if this continues to escalate, and so far there are no communications, there are no talks scheduled on the trade war and getting away from it. If that continues, Apple might be a target from the Chinese government there. All right, ASML, I mentioned that this again had earnings overnight. Normally you'd look at this and say, oh man, the earnings must have been bad. Now they did miss bookings numbers, so their orders were down a little bit lower than expectations. But if you looked at the daily chart, it was kind of already hammered down. I mean, look at how low it is. So that for the most part was not a shock to anyone. And then you see the downside on the 10-minute chart here. If we go back to the intraday, that it's basically in alignment down about 4 to 5%, just like NVIDIA. So for me, this isn't anything. It's not like earnings are causing this to go down. It's in alignment with the rest of the semis. And therefore, again, it's more about the news from China and the kind of the escalation that is likely causing this stock to be under a little bit of pressure. Basically, the whole sector is under pressure. If we look at Broadcom as well, AVGO, same thing. Broadcom closed here yesterday at 178 and change. It's trading at 171 and change today. Same thing. The news is just a general news on the semi sector. All right. Next up, let's take a look at United Airlines, UAL, which again is up on earnings. So one of the few stocks to pop on earnings. You can see it's chopping here. Now, again, if we look at the daily chart, look at how beaten down this stock was going into earnings. So yes, it bounced a little bit with the whole market last week. But overall, you would look at this and say, man, the market is factoring in pretty nasty earnings news. Now, it wasn't amazing earnings by any stretch, but at least it wasn't the end of the world per United Airlines. And that's enough to give it about a 5% bounce this morning, trading back to about this level here. It's only about $70 to $71, so it's not a big move. But again, at least it's not getting crushed with the rest of the market. JBHT, the only reason I bring up this one, it's not like a major component of anything out there, but it is a transportation stock. And JBHT, again, being a transport, can speak directly to the U.S. economy. And obviously, their earnings were not the greatest. The stock traded down on those earnings and is continuing to hover. So it just gives us a little bit of insight into potentially the transportation sector, which then extrapolates out to the consumer and beyond on this market. Gold today, guys, look at this continued move. Incredible up move. I did add to my short on gold this morning. We're actually pretty close to being break even, just a little out of the money on this. I also have shorts on Newmont Mining up in this range and GDX. I actually think that we are very close. I still think we could go a little bit higher, and I'm going to show you my master level here, my max move level. But we're basically at that point now where we could be getting into some major resistance. So let me show you that here, guys, on the charts. Let me try to find this level. I think it was, bear with me as I find this one. I think I showed it yesterday as well. So again, just bear with me on this. Was it here? I think it was right through here. So if we take a line here and we put this right through here and we stretch it up and then we drag it back to the bull market high, there we go. We just have to bring this down just a little bit right there. That's the level we want to follow. All right. So again, I talked about this yesterday here, folks. And again, you can see that we are making a push up towards the upper band of that. If I flip to my monthly chart, you can see it kind of even more so here. But again, high bull market high from 2011, the lows right through here. And this, again, gives us a target just around that $3,400 level, give or take. That, again, could be where we hit. I mean, honestly, we're trading at 33.05 or 33.06. I mean, we could hit this in the next day or so the way gold is moving. Gold, by the way, up 25% this year alone. This year. I mean, how many people out there? I mean, I still remember when I talked about it in 2022 as being the next place to put money. I mean, people just made fun of me left and right, saying, "Oh, he's crazy. Gold doesn't move like that. You know, it's not going to be a great performer." And then ultimately, we've obviously seen what gold has done just this year alone, up 25%. Incredible move, really incredible move, outpacing this year the S&P and Bitcoin by a mile, at least at this point. We'll have to see where things go. Speaking of which, we'll take a look at silver first before we flip over to Bitcoin. Silver is breaking above this resistance level. So again, came into resistance, paused for 2 days right there. Now is pushing up. We'll see if that lasts. If it does, you have resistance up here just below $35 per ounce. My favorite is palladium. I continue to love palladium. You guys know I talked about that a couple weeks ago quite in depth. And this, again, it is into a little bit of resistance, but it's had a really nice move off a little pivot low. It's going to have to break out above this level to get the next big bull run in it. So it is into resistance on palladium as well. So we'll just keep an eye on that. All right, next up, let's take a look at Bitcoin. Then we'll go to oil and natural gas. Bitcoin had a small pullback yesterday, basically flat on the day. Now, I don't mind this. Why? Why is this price action actually okay for Bitcoin? Because if you look at your pattern formation, what type of pattern is this potentially forming right now? It broke above here, above this downsloping trend line, right? It actually confirmed, and now it's consolidating. As long as it doesn't break below this trend line again, it's actually bullish consolidation that should eventually yield a move to the upside. Now, again, your upside short-term resistance is going to be this high and this high, which is around 88,500. If it can get through that, you're looking at 92. Now, at 92 is going to be like a brick wall. Like, in fact, the Great Wall of China. I mean, that's how big of resistance it should be at that level. It should really stop price. And I actually think Bitcoin could end up turning back down at that point and falling even more. But needless to say, short term, if you're a shorter term trader, the price action right now on Bitcoin is on the bullish side. Oil, we know oil has broken down. It is continuing to just consolidate. Remember the pattern formation, down move, and then essentially sideways chop, right? So you're looking at basically what we would call a upside down flag or wedge pattern here. And again, most times, 7 out of 10 or so times, this pattern resolves itself by making a move lower. Now, again, just like with the US dollar, could it go up to the scene of the crime before that rejection? Yes, it could, and there's always that possibility. But just be aware, overall, this pattern is a bearish pattern. Now, how would the bearish pattern flip to a bullish pattern? If it were to recapture this and confirm above it again, and then start to consolidate, that would actually be bullish consolidation. So again, very important for you guys to understand that as a trader, you're basing your analysis and your bias not on personal beliefs, not on your emotion, but on the chart. And so charts can change. You can have a bearish pattern, and bearish patterns, because it's probability based, let's say it's 70% success rate, that means 30% of the time it's going to fail, and you have to be able to recognize that. And the best traders in the world do recognize that, and they can flip their bias, or they cut their loss. They stop out of the trade for a small loss. That is the key, again, to successful trading and investing. Lastly, natural gas here real quick, guys. If we look at nat gas, continues to try to break this longer term trend line here. Yesterday, it was lower earlier when we looked at it, and then it kind of came back to that line. Today, it's creeping down just a little bit again, and it's holding steady. All right. So listen, guys, I mean, this is what it's all about here. All about recognizing the patterns, looking at the data, understanding price action, understanding market internals, and how psychology, the human psychology works. And that's really, again, human psychology is what drives everything. So again, I encourage you to learn. That's why I'm teaching when I show you guys these patterns and how the probabilities play out. My hope is that every single day I have one new person out there watching that says, wow, that's super interesting. So it's not just a guessing game. It's not just a gamble. I can actually put the odds in my favor if I learn this stuff. And it's true, you can. It's honestly the only way I'm able to compete and beat the institutions. That's it. Institutions have way more money than me. They have way more computerized algorithms than me. Everything, they beat me on every metric except the chart analysis. That's the one thing that I can compete with them and beat them on. And again, that's just the nature of the beast. All right, you guys have a great one. I got to head to my trading room. Thank you for tuning in. I'll see you later for Trading the Close. Take care.